Okay, guys, so I'm going to be talking to you today about trading news. Um, how exactly I think is the best approach to trading news, and also what I think is the worst approach. So, yeah, let's get straight into it. So, what I've got here is the gold 1 minute chart, and I'm just going to pull up Forex Factory. So, this is the 30th of June, and it's the 30th of June. So, you can see on the 30th of June we had core PCE price index. So that was the high impact news we had on the 30th of June, which is pretty high impact news. I mean, it's an inflationary figure. It's not quite as high impact as, like, say, CPI, but it's pretty high impact, and it brings a lot of volatility to the market. And you can see the outcome was 0.3%. But either way, that's not actually the most important. You just got to know, you got to have an economic calendar. I use Forex Factory. You got to know when the economic events are occurring, when the high impact economic events are occurring. Like on June 29th, there was GDP, and you just have to be at the right, make sure you time it right, basically, and have a little bit of understanding of, like, the outcome. Like, right, you can't be completely, blind to what's happening. Like GDP, for example. Okay, we know if the GDP is improved, that's an improvement for the US dollar, right? It's an improvement on the US economy. So you got 2%, as opposed to the forecast of 1.4%. And then, like, with PC, obviously, if it's a high inflationary data point, you kind of got to know the basics, right? But it's really not, like, crazy important for you to understand it like you know, an absolute expert. You don't need to be a economist, right? You just need to understand the basics. So let me now come into the 1 minute chart on gold. And first, I'm just going to start on what you shouldn't do, in my opinion. I mean, each trader can do their own thing. I don't really care. But what I think you shouldn't do is an approach that I see a lot of traders take, which is they just set a buy stop and a sell stop, right? So let's say they put a sell stop here. In fact, I'll draw it with a line. So they do something like this. They put, like, like a sell stop right here, and they put a buy stop, like, right here, and they just kind of, like, hope that the volume, pops price in the direction by enough. But the problem with that is spread on high impact news events can just absolutely jump sky high. I mean, you can get slipped, you can get done by spread really, really badly. And not only can you know not win, you can severely lose. You can blow your whole account. And you see it all the time. You hear about it all the time. People messing up their whole account because they tried to trade high impact news like this. And if you do this, for example, what can happen is you might have your buy stop right here, right? So let's just imagine it's this scenario. So let's say I've got a buy stop right here. Okay? And obviously, if price just if let's say on this news event, okay, price moves up like that. What you would estimate, right, is that, okay, I would have made money on this, right? Price would have activated me here with the buy stop and would have gone up, and I would have got money. I would have had a winning trade. But in reality, what ends up happening is you don't get your entry here. You end up getting your entry, like, up here, right? Because of slippage, because of spreads. And it happens every single news event. And then price just, if in this case, I believe price continued up, but imagine price just sank, just completely dropped in the opposite direction. It could have happened in this singular 1 minute candle. Price could have activated you in and just dropped. Nothing you could have done. You couldn't have exited, nothing. And then, unless you quickly put a stop loss in or just exited manually, you'd get completely screwed over. So it's just never worth it, in my opinion. And I see a lot of traders do that. I just don't understand why you would do that, why you take that risk. It just takes one high impact news event to screw your trading with that, and to me that's gambling. So with that being said, let's talk about the approach that I think is best. And the approach that I think is best is, for me, is pretty much trading my strategy that I trade on, like, the 5 minute and 15 minute, and just trading it down on the 1 minute, and using the volume from the high impact news to allow me to trade the 1 minute, right? So for example, if I was here and this news event just came out at 8:31, sorry, at 8:30. I would let the dust settle for a few candles, because then the spread, that allows the spread to kind of come down, and you're not going to get screwed over by slippage and spread. So I would let the the initial extreme volume and erratic nature of the news event to die down a little bit, maybe like 5-10 minutes. Okay, and then I'd be looking for basic price action. Right, we can see that this PCE data, this inflation data, has pushed price bullish. Okay, straight off the bat, pushed price bullish, and it hasn't just instantly reversed. So, that's why I let it simmer for a little bit, because straight away we got this push. Now, price could have just done this. So we don't want to just take buys. We want to see how price actions develop. Are we going to get something like this? Are we going to get something like that form? We've got to actually get some confirmations to actually take a trade. So right here, right now, all we've had is an initial push. There's no trades here. And then we have the retracement down. Now we got to see, okay, are we going to start respecting some support levels, right? That's what we got to see now. So I'm looking, okay, how is price going to respect this level? And you can see here, okay, again, price did absolutely respect that level. Now let's see how price plays out. Are we going to break this resistance right here? Yeah, okay, so look, we've got to break up that resistance. Right? So what I'm seeing here is we've had an initial drive from the news event. We've had price retrace, a support being created, a breaking of a resistance. To me, that's, you now have multiple confirmations to take a trade, right? You have high volume news, you have market structure, you have supports being respected, and you have resistance being broken. You have a big bullish engulfing candle. To me, that is the perfect scenario to take a long on the break of the high and to have a relatively tight stop just below this kind of area here. And then you just, in this sort of scenario with news, I would just be targeting a 1-to-1, because we, again, these aren't, we don't have a clear target in sight. I don't exactly know. Maybe I could go into the higher time frame, but for the scope of this video, I'm just going to keep it at a fixed 1-to-1. So we'll see how this plays out. Now, I actually don't exactly know how this is going to play out. So, yeah, okay. That was pretty nice. So it came straight to the TP and then rejected away. Again, I kind of like briefly saw the chart, but I don't exactly know all of the candles how they form. So yeah, this is good. Like this is what I do every single weekend. I go through all this stuff and I look over it and I see, okay, where could I have caught a trade? How could I have caught this trade? So on and so forth. This is how you learn as a trader. And I can see here, this would have been a fantastic trade. Entry on the break of that high, it started to push, and as soon as I got, halfway to profit, more or less, I would have tightened my stop loss behind this candle. And then once this next candle had closed, I would have tightened my stop loss again to basically break even, risk-free trade, and then it just slammed straight to a 1-to-1. And for me, with news, that's all I'm going to go for, really. Unless there's a very clear higher time frame target, I'm just going to keep my life simple. Yeah, because with high impact news, you never know. You can get quick whipsaws, you can get strong spikes in volatility. You gotta be thinking quick, you gotta be acting quick. You can't be trying to hold this trade forever. And if you do try hold it a little bit longer, for example, in this instance, if I did try hold it a little bit longer, there's no problem with that. But I'd be very quick to manage risk. Let's say it didn't hit my TP and I had my TP like up here because there's some sort of higher time frame level that I was targeting. I would be very quick to manage my risk. I mean, as soon as price, say, broke this level here, say broke this low, or even broke the previous low to the left, that one, I would have just got out at like a 0.5 R, because I don't see the point in weathering this storm. Because with high impact news, we could just have price just slam down all the way down here. And to me, that's why I like to be like very on the ball with my risk management and my taking profit during news events. And anyways, enough on that. Let's move along to see if there's another trade. I'll actually keep that one on. So let's move along and see if there was another trade. So we have one successful one there. Again, I would just be focusing on buys in this scenario because we're maintaining this bullish market structure. And the next thing that I would want to see is, are we going are we going to respect this support again? Because you can see we've had a pretty hard retracement. Are we going to respect this support again, or are we going to break straight through it? If we break straight through it, maybe we're going to see a reversal and price target these lows here at 1904, right? Okay, it looks like we're, okay. Right, so I thought we were going to break this support there for a second, but straight away price rejected with this candle. And to me, that's a pretty clear buy. I mean, I don't know how other people see this, but to me, look at this price action. Price comes down to this, so we have higher high, lower low. Sorry, higher high, higher low, higher high, and price is attempting to break this level and is unable to break it. Comes to the support and prints a big bullish engulfing candle. It's pretty, in my opinion, I mean, this is how I trade. There's a high probability that price is at least going to come up to here. To be honest, at least going to come up to here. And in my opinion, at least going to come up to here before testing this low. I mean, with a candle like this, the support here, it's pretty unlikely if I enter here that I'm going to get price just slam down. Obviously it happens, but it's pretty unlikely in my opinion. And that's why I like this. It's high probability that we're going to get at least a 1-to-1 in this scenario. We've got multiple confluences, and I would be betting we'll get a 1-to-1. And in fact, so a 1-to-1 for me is there, and I would be pretty confident that we're going to get price come to this resistance right here at a 1 to 1.5 R. Probably tag out that high. From there, again, I don't know what's left. I don't know what's left on the higher time frame. So, it's probably going to tag that high, and then from there, I don't know what's going to happen. I don't with my trading, I don't predict crazy far out. I'm just okay, how far can this next candle go? Can these next few candles reach here? Probably. If I'm asking it to break this high, the next high, to me, you're starting to diminish the probabilities. So let's just see what happens with this one. All right, so by the way, I would move this here. And then I would also, in this trade, I mean, I wouldn't be trailing every single candle straight away. I would let it go a bit more in profit, but I would, at this stage, 100% my TP would be in profit. It would be at break even at least. And then probably once this candle formed, not probably, I would have tied my stop loss in profit there. So that would be plus 0.4 R guaranteed at that stage, because I've put my stop loss there, and then just let it go. I mean, if it breaks this low, it's probably going to stop me out. So that's a logical place to have the stop loss. And okay, let's see what happened. Okay, well, you can see there. So basically, I decided to type my stop loss behind that candle because I was anticipating that my TP was right there. It just missed it by half a pip, right? And normally, if you follow my trading, you know that what I actually do tend to do is I put a box at resistance at resistance levels like this. So what I normally do is put a box like that, and then I just put my TP at the lower end of the box to be conservative. So probably actually would have taken profit at this point, but let's just ignore that because there's a high probability that it would have just not hit my TP there. It might have just missed it. So imagine it just missed it. I've already put my stop loss in profit at plus 0.4 R. So I've guaranteed 0.4 R in the bag. And then price came down and it did tag me out and then ultimately continued to full TP. But I don't really care if it continues to full TP because to me, you have to be focused on risk management. My first focus has to be how can I manage my risk? How can I keep my trading slow and steady, consistent? To me, that's by doing this. If I had kept my stop loss down here, sure, it would have felt more comforting during the trade. Can't really grab it. But for some reason, you would have felt more comfortable in the trade because you're like, oh, I've got all this space, so price is never going to stop me out. One candle, and you're down minus 1 R, as opposed to me being up plus 0.4 R. In the long run, it pays in my opinion. And you can see here that price ultimately continued. Now, this is a little bit too far after the news event. the volume starting to die out a little bit. I wouldn't really be trading beyond this point anyways. But you can see here that price came to this resistance, kind of broke it a little bit, not quite, kind of rejected straight away. Then we had another breakout candle right there, kind of just broke above the resistance, and then price moved up. And let's see if it continued up. And then it came back down. Yeah, you can see the volume slowly start to die out. But yeah, that is how I'd approach it. I would kind of like block out an hour after the news event. So say 1 to 9:30, block out this area and say, okay, this is the trade. And what you should do is do that for a lot of news events, screenshot and see for yourself. Oh, this actually works. If I just apply this basic logic, the confluences of market structure, high volume time with the news event, support and resistances, candle formations, risk management. If I would just apply all those things in a logical, simple plan, will I be able to make money if I trade news events? And if the answer is yes, then there's absolutely nothing wrong with it. But just don't do stupid stuff like try hold your TP to ridiculous amounts or putting in buy stop, sell stops on NFP. I mean, just don't do that. Just keep it simple, keep it logical, and that's exactly what I do with this approach. And for me, it works pretty well. So I'm just gonna stick to that. Simple as that. Just stick to that. Don't let the noise affect you. But anyways, I'm gonna leave it that there for the video. Just one example, so it's not too long of a video. But of course, I can go into more examples in future videos. And yeah, so that's it for this video. I hope that's useful for you guys, and I'll see you in the next one.